After all the books and courses and the experimentation, sooner or later you have to get down to brass tacks and define what your trading edge is. Now the problem is that if you ask 10 people, even at the pro level, like where I'm at, what's your trading edge? Half the time they can't even tell you. So I'm going to give you a simple explanation. You have to experiment, right? So I don't want to talk out of both sides of my mouth. And that means you're not really expecting to win or build a career on this particular aspect of your trading. You're trying to put it on for size. So when I was learning how to trade, I realized like there are all these different chart patterns. But what made them all unique was that every trader who was trading them would trade them a different way. So I started to understand a little bit more about the nature of trading is that it's not necessarily the chart pattern, but it's how you trade the chart pattern. Because you can show head and shoulders or cup and handles to some people and they screw it up, right? Which is hard to imagine, but they do. So I realized like there was a little more to trading than meets the eye. That it wasn't just a book of chart patterns. Because look, if head and shoulders down represented one thing or head and shoulders up meant another thing, how come there weren't more people making money if the damn charts were so obvious, right? That's the big pink elephant in the room. It's like if these charts are in fact bullish, how can people trade them and still lose money? Right? Because losing is what losing does, right? So the simplest way to understand it is to segment your trading by pattern probably, and then figure out what the expected value is. Because at the beginning you might not know or recognize or be able to understand what it is that you actually bring to the table in the world of trading. It might be, it's hard to see the fire sometimes when you're standing right on top of it. So it might make sense for you to kind of just look at the math and say, okay, I might like this one particular pattern better, but this is the one where I'm actually getting the results. If you look at the data, you'd be surprised what you might find. It's true. And it's happened with me plenty of times, which is why I start to why I started to look at the data, look at the results, look at the math. What was my frequency of winning? What was my frequency of losing on certain, setups? And again, I use mostly data, not chart patterns. But at the end of the day, they all work. They all can work. Let me say it that way. The key to having the trading edge, though, is knowing that you can make money if you have the patience, which is a mental part of it, to sit on your hands and wait for that setup to show up. Where you can get sidetracked is if you're looking at one instrument because your account is small and you only have so much margin, you might find yourself forcing trades that you have no business being in because you're watching the market move. It's not your setup, but you have to be involved anyway because you can't take the emotional pain of not participating. You see what I'm saying? So that's one of the reasons why I poo-poo small accounts is because you want to be in the game. You're the sixth man on the basketball team and you can't wait to get in the game. But, when you're underfunded, you're the small banana in the crowd, and that's just the way it goes. So you have to have an extreme amount of patience to be able to sit on your hands and wait for that setup to show up. Otherwise, you're satisfying emotional needs, not necessarily a financial one. Now, I'll be the first one to admit that it feels good to make a winning trade. At least it was at the beginning of my career. At these days, I don't really care emotionally about the outcome of any one particular trade. We're going to talk a little bit about that tomorrow and the secret mind trick that I use. Because if you don't put the word secret or millionaire or eight figure in the fucking title of the YouTube video, no one's going to watch it. So I got to start doing that, right? Obviously, my videos suck because I don't say the secret trading tactics of a proven eight-figure trader. Go ahead, buddy. Good luck to you. At the end of the day, the mental game is the most important part of it, right? Plus, half of these people, the old joke is, how do you make $1 million in commodities? Well, you start with 2 million. So I don't trust anybody with titles like that. But you can do and figure out what's best for you. I'm not here to preach. So in the simplest definition, check out the expected value of a trade. It's easy. You've got the math. You keep a trade ledger. You should keep that anyway, just to keep a diary of what it is that you're doing so that you can, put your behavior down and keep track of that over time. The importance of a chart pattern in and around that, I have mixed emotions about chart patterns, again, because You can look at them, you can study them. I know that there are guys on Twitter who pump out this, I call it nonsense, right? Because when I look at it, it's like, it's filler content, really, right? It's like the roux that you put in gravy. It doesn't really help anybody, because then they're looking at the chart and they're like, damn, is that a Head and Shoulders? I guess you could look at it that way, but the thing is over here and it's too small and it's this and that, and it's like, so I have mixed emotions about chart patterns being fail safes, like being definitively bullish, when I know and I've witnessed plenty of people losing money trying to buy things long when they shouldn't, when they should trade less frequently, I guess is what I'm saying. And I know that's the hard part. You have to figure out what it is that you're doing, why do you do what you do? And that's the part that no one really talks about. I try to speak about it as much as you can because I know that's what's going through your brain when you're sitting there in front of your desk like, okay, I see this thing. I got my account set up. I got all my charts. And so-and-so's telling me this is a bullish pattern. I'm seeing all these tweets and blog posts and other social media mentions of everybody's favorite darling stock. I'm not participating in that. And then you're so confused you don't even know what to do. So I would, again, keep it super simple. Pick one, and then trade it because it is going to be your uniqueness, right? That's the alpha of the trading. If beta, it represents the market, the alpha is what you bring to the table above and beyond what someone could do if they just did buy and hold. So I would think the best thing for you to do is to experiment, knowing that it's not necessarily about building a track record from that point, but it's about trying to get a feel so that as you execute the trades, you can figure out, is this a trade setup for you? I know plenty of people who don't trade cup and handles, for example, even though it seems to be popular. And why? Well, it's just like, why did you pick the partner that you're with? There's probably good chemistry, right? So there's no definitive right answer for all of this, right? You can buy this. Heck, I've been given a million books on technical analysis. And frankly, I find it exhausting. It's like there's just too much to know. And I can't take each one of those data points, if you will, and turn that into the proverbial fortune. You really need to pick one or two things that you're really, really good at and then take solace in that and execute that day after day after day. And so if you have positive expected value, I would say then therein is your definable edge. Start with the expected value, right? There's a video on this YouTube channel on how to calculate it. It's pretty simple stuff. It's not that sophisticated, but it does show you the evidence that for that particular setup or chart pattern or whatever it is that you're using to enter, adding risk and then removing the risk, that net of all your activity, you're actually making money, right? Including the fact that you might not win as much. I mean, you might not win as frequently as you lose, but your winners are many multiples, right? The size of your losers, so that this way, over time, over hundreds and hundreds of trades, you know that you're now the casino. That's your trading edge. That'll help you be able to define what your trading edge is for you, right? Because you can't just say, well, I'm trading cup and handles, or I'm trading 1, 2, 3 reversals, or I'm fading 2B reversals. That's all great, and I've done them all myself. But you have to go back and then look at the math and see which of these proved profitable for you over many, 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 many trades. It's a mistake to think like you did one thing once or twice, like that you're onto something. You could certainly give it attention, and try your hand at it. Especially trying it across many instruments is probably the biggest test, right? Because now you're very robust. You don't want to find yourself, day trading or trying to scalp on one instrument, on one pattern, because in the short run, you're not going to know if you were just in the right place at the right time. The ego wants you to be like, yes, I've made it, I've conquered the world, and I've had those feelings. But there's not enough scientific evidence to prove that. That wouldn't hold water, and I wouldn't allocate money to you because you had a good week. It's not enough time, right? You're thinking about years, right? Because the money's hard enough to come up with in the first place. So you really want to make sure. Even if you're back testing, I say minimum 10 years across any, 60 different instruments minimum. Now, that the problem with that though is that there's still problems. There's lots of problems. One is that you don't include '07, '08 when we had all that subprime morass, emphasis on the second syllable, right? You'd missed 9/11. You don't know. Two, then if you look at the data, we always have survivorship bias to have to think about why. Well, if you look at what happened in that period of time, I'll just think about a few things from the last 30 years. You had companies go under, companies go broke. Well, guess what? If you type in the ticker ENE, which was for Enron, it doesn't come up. You can't see the data. Why? Well, because you can't trade it. So the folks who are the data providers are figuring, why would we even put that in the data set if it's gone for good, right? So you have everything that failed, right? You have Bear Stearns, which was BSC, that's out. LEH for Lehman, that's out. Then you have the companies that did get taken over, like when the banks were hot and Glass-Steagall was appeared and everyone was accumulating, the bigger companies were accumulating the smaller banks. You had First Tennessee, you had Bank Boston, like they don't show up either. If you type in BKB, which I know I've mentioned before on the show, that doesn't show up. FTEN, which was First Tennessee, that doesn't show up. And they were good companies. So, but still, all you can see are the survivors. Now, they might have been rolled up into other successful companies, so you have to follow other tickers. But the point I'm saying is that if you go back in time 30 years, when all those tickers were alive and kicking, and you had a trading model, and or you were trading certain setups, you'd want to know ahead of time if your thought process or your methodology would have put you in those trades. Especially long trades in the companies that went bust. Long trades where the companies got taken over. Maybe you have a knack for that, but you would never know it if that data is not included. So, of course, it's a pain in the ass. You have to go actually buy that data and add it into your data pool because you can get it. But as I suspect, not to sound like a party pooper, most people are too lazy to do it, or they're too cheap to spend the money, or they're like, Mike, I'm in trades for 2 minutes, so what do I care? You're right. What do you care? But I don't want to be sitting in front of the screen all day long waiting for that 2-minute window. I can say that after 36 years. My time is worth more. I'd rather be painting. I'd rather be watching. I have MLB.TV. I'd rather be watching, baseball games than scalping. But that's just where I am in my career. You can do what you think is best. But at any rate, in order to define your trading edge, you'd want to look at the data, not necessarily the chart pattern, and say, okay, this is my savior. The savior is your behavior around the event itself. Because again, if those chart patterns were definitively bullish or definitively bearish, we wouldn't need any more books. You wouldn't need to have a CMT because the evidence would be there in the book. This is definitively bullish. This is definitively bearish. This is how you definitively put on spread trades with options, futures, or pairs trades in equities. And that would be it. There wouldn't need, it would be so definitive and so crushing from an argument standpoint that there wouldn't need to be anything. You wouldn't need this channel. But at any rate, so look at the math, calculate the expected value, and then you can reverse engineer it and say, okay, this is how I define my trading edge. It might be different. It might be better than mine. I hope it is, because then you'll have a really great career. Anyway, if you like this video, check out this one.